What would you say to fundamental analysts or someone like myself who's trying to model companies out next 4 quarters and they're looking at the fundamentals telling them one thing, at least in the near term, but clearly on the macro side, your growth model suggests an acceleration more towards, I guess, in the back half of the year.
Yeah.
So, how would that dynamic go? What would you just say to someone like myself, looking at companies and saying that the valuations look extended, doesn't show up in the fundamentals?
Yeah. Yeah, I'd never start with valuation. So if a bottom-up analyst like you is asking me that question, I'd say, okay, if growth continues to accelerate, then we're going to continue to see expectations rise on those factors. So I'd look at companies and I'd actually try to separate them on who's just like a mainline economy type company that's got a high correlation to growth slowing on the downside and then accelerating on the upside. And I'd say I'd stay away from those unless you got a bulletproof catalyst. And the catalyst for me, as you know, is never valuation. And it really doesn't seem to be for you. Like something like Athena, the valuation's never scared you. I mean, if you're seeing an acceleration in Athena's business, you're like, okay, it's expensive. But not many companies can grow this fast, so it should be more expensive. So that's what I do. And I do think that it's interesting that if you take something like ACA and repeal and replace, and you can identify companies that dynamically can have bad numbers in the face of the aggregate GDP accelerating, now you got a great long short setup. I mean, that's the best best possible thing to do, But I'd be very wary of timing. So I'd wait for the top end of the range in the marketplace, and then I'd put those shorts on. And I'd also be respectful of the fact that a raging bull market is very difficult to make money on the short side to begin with.
Yeah, absolutely. And to your point on the ACA, I mean, we had a couple questions on it. And to follow up on Keith, we are having a call today at 2:30 with Emily Evans, who heads up health policy for us, and as well as Tom Tobin, to kind of go over the puts and takes of the legislation that was proposed legislation that was released last night. But it's amazing just to see the multiples in the hospital stocks in particular just go up and to the right, and the fundamentals continue to just not show up, and everything that's released in the ACA, at least on the margins, are negative. So it's going to be interesting to see how it plays
so if you take something like that, the macro answer would be, I'd say, wow, okay, Emily Evans is going to get on the call. She's going to say this repeal and replace, the first wave of this is bad for the hospitals. And then I'll say, well, what if U.S. labor continues to accelerate like this ADP number just did? And we start to see utilization metrics at the hospital level track alongside labor. So that's the macro thing is clearly improving, whereas the sector and regulatory risk is clearly not improving. So that makes it hard. I mean, obviously, if the market's going up and people understand the fundamental reason to be short HCA, and you get a big jobs number, well, why don't I wait till a big jobs number on Friday and then short HCA? So you could see that, like, obviously these guys are telling me to short HCA or a hospital stock, but obviously I haven't shorted it yet. And I've had to learn this lesson many, many times. I mean, I used to be the analyst, I used to be the PM, and now I'm just the guy that's talking to you right now. And the reality is that patience is a very important thing on the short side, in particular in a raging bull market.